Hello everyone, this is Juan Sarmiento and today is Tuesday, September the 7th. I have to apologize for not having a video last week. The issue was I was very busy and stressed out over some deadlines with immigration here in Spain. Fortunately, all was resolved, but the week was very, very difficult and I have to do some work. So suffice it to say, I didn't have much time and I was really stressed out. The last thing in my mind was this video, but that's okay. We're going to deal with that right now. And so I'm planning to enter a trade on Apple. Apple has been hitting new highs and the volatility is really low right now. And so either way, whether the stock continues on much higher or collapses, which at this point I really doubt that. But if it happens, we should be all right. So let's go to the trade tab, the analyze tab, and here is the trade that I'm proposing. And here is the chart. Okay, so we have two contracts here. That means one to sell, two to buy. The date, you can change that if you wish. The expiration for the front month is October the 15th. So we can enter 10, 15, 21, and the long, sorry about that, 10, 15, 21. I'm getting used to a new keyboard. And the back month is January the 21st. So that's okay. And the strike price, as you can see here, is 155. So we put that if you wish. And the price is 29.55. So we enter that here and multiply times 100, 29.55, and that gives us 2,955, and our account is around 86,000. So we want to make this perhaps 3 times. And that's 88. That's pretty good, very close. Okay. Then our earnings, we look at it over here, chart, and in the chart you should be able to see the earnings, actual and estimate. The actual is 1 and the estimate is 1, the actual is 1.3, so we enter that here, and you can see the difference is 30%, higher than expected. And then we enter the volatility skew of our trade. Go to the analyze tab and you can see it here, and I have entered those numbers already, and I know that the difference is less than 3%, give or take. These things fluctuate as we speak, so that's a very close indication there. Then we have the liquidity is the price 29.55. You can just simply say create duplicate, and then you'll see the mid and the natural. Okay, let's enter that. 29.58 versus 29.75, and the difference is minuscule there. And then the current IV percentile, go to the trade tab and scroll down until you hit this today's options statistics, and that should be here. Current IV percentile is 15%. Enter that there, and there you have it. Trade. It's a very good trade for us, and you can adjust. I have only one lot, but I'm going to transform that to 3. So let's go to the analyze tab. We have to adjust this because we have illegal shares, and therefore my trade is not going to be accepted. So let's go figure that out. Okay, let's go through all the trades. Adobe, and right there, that's my problem. Okay, we have a negative shares here that we need to sort of deal with. We have calls at 590 and 660. The stock is trading at 660. So this 590 matches this one existing October. We could close that. Okay, analyze closing, and that will give me a cover stock. and that will close my long call, which has the same price as the sell price of that share, so it's a washout. There's no difference there. And it says 589, 585.90. So that means that instead of having to pay the full 590, I'm getting a little bit of $5, almost $5. That's because the call here has an intrinsic value. Then we get to sell that and get it back. So let's say confirm and send, and wait until that gets filled. In the meantime, we could think about what are we going to do with this call, because that's in the money. Okay, and now we have the put, which is pretty worthless at this point. Let's see, we can close both actually by saying analyze closing, and doing that, changing, it's not a strangle per se because there are two puts that we need to sell, and we get $33 in credit. Let's see if we can close that. And if it closes, see, they are distant. Those puts and calls is a very wide strangle. It might be hard to fill. We can also sell them separately. We'll see. And we can right now enter that Apple trade, because now we have no negative indicators there. Let's go to the trade tab, analyze tab rather, and look for that Apple trade. And here it is, and we can just send it off. It's now increased the price just a bit. And we just wait until it gets filled. Meantime, let's go through all of the trades here. Adobe, surely it will get filled very quickly or very soon. HCA, okay, we have this expiration. Do I want to close it or want to stay on it? Right now I see that it looks like a loss, but I want to see really, after all is said and done, is this really a loss? Let's go to the monitor tab, and you see we have been trading this for a while, and we already did a rollover. So let's do this analyze trade, and it's the same price twice. So let's do 4, 4, 4, and 2 for the short side, and the price should be the same for both. 52.95, 52.95 for both trades, and then we did do a rollover and we got some credit. Analyze trade, and now we get to see by hiding the position whether we have a little bit of a profit. Okay, so that means that by the rules, okay, I'm allowed to I permit myself to do a rollover if I wanted to. And that was the Apple trade filled. And what do I do about the HCA? Let's take a look at the chart. You know, I want to do the rollover because it looks like it wants to go down significantly. Let's see. So how do I do that? Well, I'm gonna do a rollover. So I analyze trade, duplicate that, and our rollover is going to be the September, is what we're going to buy back, the September options, and we're going to sell the October, let's say October 8th. You can do any October since they're weekly, and we're going to get a good $547 times 2. Okay, that looks actually quite nice. Okay, let's do this again. We copy the previous trades. Going to the monitor tab is what I'm doing. Make sure the date is back, and then you enter the ticker symbol and it shows up. All the trades show up. Okay, and then hide the current positions, and this is the resulting trade. Okay, that means we have a profit, and we are going to extend the trade for a little longer. Okay, that's what we're doing here. And so we're going to buy back the September options and sell August options. Okay, good. I think I want to do that. Okay, so it should appear here in the working orders. So let's go to the Analyze tab again, and here's our trade for $5.62. And you can multiply that times 200, that gives you $1,124 plus the debit. And that's it. It got filled. I think. Yeah. Nope. What got filled was the straddle. The Adobe straddle got filled. Good. So we're out of that one, and the HCA is working for the rollover. Let's go to low. That looks like it wants to go up. Let's look at the trade. Here again we have September 24th. That's 17 days to expiration. I don't need to do anything. This is what it looks like. Yeah, I'm gonna leave it there. Again, you can go to the account statement and copy. It's the same trade. All these are part of a previous trade, nothing to do with it. So let's say Analyze trade. I just got filled in my actual account, not here. Okay, so that's what that bell, if you heard it, is about. It's my own trading. Okay, so here we go. That's my trade. As it looks like not right now, and it looks fine. Okay, we just need to wait a few days more before we do anything. MS, we have been taking profits on that one today since the open has been doing well. I don't know what's going on, but it says not applicable. That means that we are not seeing the profit and loss for the day. Let's take a look at the chart. Oh, interesting. This is sort of a funny looking chart. It's moving sideways with all these little dojis, as they're called, these candlestick patterns. And that means that it may be accumulating energy to move strongly in either direction, really. So yeah, if it goes in either direction, we will be fine. September the 10th, that's this week, so we need to choose to do rollover or not. So let's take a look at the monitor, and here we have the trade plus some credit here. Obviously that's my rollover. This is the roll over, and this is the roll up, or the sale of that call. So let's take a look. Analyze trade. Analyze trade. Back to the monitor and analyze trade. And once more, Analyze trade. Let's hide the simulation, because now we want to see all, and hide the position because we want to see the simulation. Okay, we can delete that and that. This is my trade, and you can see that I have a $55 credit. Okay, so it's profitable. So what I want to make sure is that I don't keep rolling over as a loser. So this is a winner, if by little. So I allow myself to decide whether I want to do a rollover or not. We can do the rollover the call side, and then the put, we would add the put on Friday. Okay, so let's do the call only, the call side. And this is what it would look like. You get 10 cents. Well, we're not going to roll it over to September. We're going to roll over to October, and that gives me 72 cents, 67 cents. Because it's so out of the money, you see. That's why. Okay, so let's confirm and send that. Okay, and other than that, it's close to delta neutral, so that means we're fine. Okay, there it is. That's my order, and that's the stock, and we just let it sit. If it doesn't fill by the end of the day, I would adjust the price so it does get filled. Nike. Let's take a look at the chart. It's been going down. Let's take a look at the... Okay, it's been going down, down, down. I think it's time to neutralize my deltas here. Is quite negative. But I think it's approaching the Ichimoku cloud, and perhaps it could bounce from there. Okay, all right. So what do we do? Well, September calls here that are expiring. We can roll them up, roll them over. Yeah, you can do both. Analyze rolling. Okay, and instead of September, let's go to October 8th. And that gives me $3.70. And that makes it less, you know, right now it's the deltas are minus 114. With this rollover is minus 22, so it's neutralized. Before I do that though, I'm thinking that we could, you see, we have how many calls? We can close one of these calls. My monitor is acting up. Okay, I think I've done this. All right, so let's we can sell a put, let's say an additional put, and that would make my deltas even less neutral, less negative. Okay, so let's say custom and sell one more put here, right there, and then that becomes very delta neutral. I'm going to do that and then get a little more credit. And confirm and send, just by selling an additional put. There it is, and now we have minus 2 delta. That looks nice. All right, let's take a look at YUM. This is October 1st. I'm not going to do anything. We just wait until gets closer to the expiration. That's it. Let's take a look at the monitor tab. Okay, the credit here on the HCA is below the market price, so that should be fine. The credit for the MS, we can change that. Adjust it a little until it gets filled. And the rest I take care of to make sure that it gets filled at some price. I might have to go down, but yeah, that's the MS got filled. This HCA, if I say cancel replace, you'd see that it's a little wider. Yeah, from 4.10 to 5.75. So you can actually go a little lower, like 5.55, to make sure it gets filled. But I will make sure that it does. That's all for today. Thank you very much for joining me, and I'll see you next time. Bye-bye.